The agenda today, let's just go through a couple of items here. So one thing I'm going to discuss is what you should know and what you should rely on your CPA for. Business owners, it's that black hole. Everyone's kind of uncertain when it comes to taxes. We're going to break it down 3 basic steps. We're going to let you know exactly what you need to know from your end. It's going to really remove all that stress, that fear of the unknown. That scope of that universe is going to start to come down. You're going to be able to understand your taxes a little bit better. I will work in some tax law changes, show you how they impact you, and we're going to apply these to yourself again with that matrix or the handwritten paper. We actually want to calculate out your tax savings, each and every one of you. Little side note, we're going to be doing a $100 giveaway. So at the end of this webinar, please email me. The Google Docs has my personal email on it. You could send me a copy of what you filled out with your total tax savings. Whoever saves the most amount of taxes is going to get a $100 gift card. We're also going to be sending out a couple of Zendo t-shirts for everybody else who participated on the second, third place winners. We want to get this tax savings thing going, but more importantly, we really want you to understand as a small business owner the importance of knowing about taxes. Taxes are probably one of your biggest expenses as a business owner. So this is something really important for you to know. Zendo, as most of you know, we're online, cloud-based. We provide bookkeeping and accounting services. We have a strong feel here that small business owners really should kind of understand the whole scope of their business and be able to focus on their business. We take a lot of that away from them from the accounting side and allow them to really zone in on their business. We have a heavy emphasis on tax and tax savings, which is why we're reaching out today to everybody to get them educated. And this is the matrix chart that you should be having right now downloaded. This is what we're going to go through. There's going to be a common theme here. After we discuss a tax tip, we're going to apply it to your business. You're going to enter the information into your matrix, and it's going to calculate everything out. So tax planning, the first step. Tax planning is planning. So why is it that most business owners are planning, or they call it planning, when they sit down at the end of the year to do their tax return in March or April? The definition of planning is doing something beforehand, and that's what you should be doing as a business owner. If you have up-to-date, accurate financial statements that you can rely on, I'm going to show you a couple of steps in here. You're going to understand how you can plan ahead, and we're going to apply these steps throughout the year. Not just at the end of the year, but throughout the year, and definitely before the end of the year, because again, we're a bunch of proactive business owners here, and we want to make sure that we get that taken care of. So we want to know what your tax exposure is. That's the first basic rule here. Understand the tax exposure, and it gets complicated, but we're going to simplify it. What you need to know most importantly is between 2017 and 2018, the tax brackets have come down about 3%, okay? We're going to simplify everything for you in a couple of slides forward, but this is how it's broken down. These are your tax brackets. It goes based on if you're married, you're going to be looking in the green on the right, and if you're a single taxpayer, you're going to be looking on the, and it's a breakdown of everything that you have to go through here. The next slide here shows you this is a common misunderstanding. You're not going to fall into a higher tax bracket just because your income goes up a little bit. Tax bracket does not apply to all your income. What everybody needs to realize here, okay, and you got to look at this, look at it as a staircase. When you're on that first step, okay, and again, if you're married, it's between $0 and $19,050. That first step that you're on is going to be taxed at 10%. And then when you take that next step to the next amount of income that you get on, that's going to be 12%. So it's not necessarily that if you make more money, you're going to pay higher taxes on all of it. It's a step-by-step process, and you're going to slowly just walk yourself up those steps. Okay, check the bracket or the range of salary that would fall into, or business income, and you're going to apply that tax rule or that tax rate to that portion of your income. So to make it very simple, we went ahead and we actually summarized this. So these are ballpark estimates, but we're going to get it very close and again narrow down that scope of the uncertainty. So I want the first thing that we can all do, take a look at this. Take a look at the income level that you would fall in. If you're married, you're going to need to take your spouse's income or ballpark your spouse's income. Find out where you stand in this. Okay, what level do you fall into? And that's going to be your blended tax rate. So that's if we took all the steps from the previous slide and we combined them and squished them down and consolidated everything together. This is what your blended or average tax rate is going to be for each one of these income thresholds. All right. And if you could take this and identify which one do you fall into. Now you can go to your matrix and let's enter that rate in here. You see the green 18%? That's the one that I'm going to use for this example. If you could open up your matrix and jot in to each one of those boxes there, just jot in what bracket do you fall into. I'll view the brackets again so you can see them. Take a couple of seconds just to kind of identify it and make sure that we can get that entered into your bracket. This is going to be the basic foundation of all your tax savings. This is the rate that you're going to save on every tip that we can start to apply to your business from here on out. And again, you're going to enter it right into this ratio or just jot it down on a piece of paper and try and scope this out so we can start calculating some taxes. So the importance here, and I mentioned before, is small business owners need to know their numbers for multiple reasons. And for tax purposes, if you have up-to-date and accurate financial statements, you could take a look at this and you could apply that tax rate that you know that you're going to be at across the board. So you always know how bad is my taxes, what's my tax exposure, how much will I owe. You always can calculate that on a month-to-month basis. These are just some sample financials that we pulled that Zendo has, but each of you have your own set of financial statements that you're tracking your business on, and that's what should be used. Okay, this net profit, it's highlighted on the bottom here in green. That's the money that you're going to end up paying taxes on at the end of the year for most corporate structures. All right, so why don't we take a second? You know your business. Let's estimate out, and again, we're going green. Green is going to be the inputs here. So let's estimate out, where do you think your business income is going to be at the end of the year? Okay, the example I showed you was through November, but estimate out in that top box next to business income, put in there, what's your business income going to be for the year? What's your profit going to be for the year? And that item's going to be used there. If everyone's got that in, okay, now keep in mind, you're paying taxes right now. In my example here, 18% is going to be paid on that business income number. So the goal of tax planning and tax strategy is within the tax code, without doing anything we shouldn't do, let's take advantage of every aspect that we can take advantage of and drive down and start saving some more and more taxes. One easy way to go about this is to project out your expenses. So let's say here, you're a pizza shop and a pizza owner, you're always constantly underneath your oven, it's breaking constantly, and you're saying, I know January or February, I'm going to go out and buy a new pizza oven. Don't wait. Do not wait. If you go out and purchase that pizza oven now in December, that becomes an expense for you this year. That means that the IRS is going to basically lend you the money because you don't have to pay tax on that money come February, March, or April. Okay, and you won't pay tax on that money until all the next year. So it's a free interest-free loan from the IRS that you're going to be getting, and that's going to be extremely important. On top of just pizza ovens, think about all these other aspects of your business. Okay, let's identify if you're invoicing customers. Okay, you could slow down your collections a little bit. All right, maybe not send that invoice out on December 15th. Hold it until until January 1st or January 2nd, and you could slow down the income. By slowing down your income collections coming in, you're essentially lowering your profit, right? And then at the same time, think about what your vendors are doing to you. Everyone's going to try and take that tactic. So your vendors might not be sending you your bills to pay. Okay, so you know your business, you know your vendors. Okay, whether it's rent, whether it's somebody who you're working with on a constant basis. Pick up the phone and call them. Okay, you have a little bit extra cash in your bank account, call them. December 20th, call them and say, hey, I know I owe you guys some money. I want to get that out to you before the end of the year. Can you send me a bill now and let me take care and pay that? Again, anything you pay in December is going to be saving you taxes immediately. The rest of it, it's an interest-free loan that the IRS is going to give you, and it's extremely important to try and leverage that money. Okay, this stuff really does add up. So if you could come up with a couple of vendors, a couple of items that you might need to purchase. Again, this is a need. A lot of times we'll have small business owners come to us and say, oh, I want to go buy a car because I want to save taxes. Okay, that would be the same thing as us giving away a Ferrari as a giveaway. You're still going to have to pay for that car correct? Yes, you might save taxes on it, but you're only saving 18% of the value. So it's still out of cost. It's still coming out of your pocket. Okay, so we want to go ahead and pay for things that you need and you know you're going to need. All right, things that you're going to be paying in January. And if you thought of it, you guys, you know your business. If you thought of it, then go ahead and put that information in. Okay, total up all of it. And you're going to enter that information into the project future expenses number. That's where you're going to enter the information. All right, the next rule. This is a good one here. Retirement plan funding. I know it's a go-to. I know a lot of people do it, but what you need to do here is think about this. If you have extra cash flow laying around and you have the ability to do it, then you're going to go ahead and you could open up a retirement plan of any sort. It could be anywhere from $1 all the way up to $50, to $50,000. Okay, and you're going to need to talk with a financial planner or somebody like that just to make sure that you're opening up the right account and it's qualified. But the general rule of thumb here is if you're opening up a retirement plan, anywhere between $1 and $50,000 you could put away. So if you have extra money available, okay, and your business is running and you're profitable and you want to put some of that money away into retirement, go ahead and fund. It's basically taking money from your left pocket and paying your right pocket. And in return, the IRS is going to reward you and you're going to be able to write that expense off even though you're paying yourself. And that could be another savings. So keep in mind, it could be $3,000, it could be $1,000, it could be $50,000. Okay, take a look at your current business situation. Figure out how much money can I afford to pay myself for retirement, which is beneficial anyway, and everybody should be looking at that also. And then see if you could take advantage of that this year. So in my example, we're going to go back to that matrix. In my example here, $17,500 is the number that I put together here. Yours might be $1,500 or it might be $57,000. But anywhere in that range, go ahead and grab that number. And you're going to go ahead and enter that into the matrix sheet. All right. And now that we got that in here, this is a favorite of many people in the office. As you can see, people are sending kids pictures in here so they can get write-offs. But this is one of the ones in the office, and this is actually impacted by the new tax laws that passed. In the past, you could pay a minor. That means essentially your children. You're spending money on your children anyway. At this point, this year going in for 2018, you have the ability to pay $12,000 per child. Okay, and there will be no tax. The child will not have to pay any tax on this. It's below the limit, and it's a pure expense to the business. Okay, and now it has to be a justifiable expense. So if you have an infant, that infant can't be, flipping dough and making pizzas in the pizza shop. However, if that infant's on your website and you're changing the picture every 3 or 4 months and you want to pay them a modeling fee, because all of our kids are adorable, as you can see, and you want to pay a modeling fee to your child, well, you could go ahead and do that. That's allowed. The IRS absolutely allows it. And again, just to clarify, your child will not owe any taxes. They won't even need to file a tax return if it's under $12,000. Okay, you just need to make sure that you're making that payment. You're going to put them on a payroll of some sort, and you're going to go ahead and execute that. So if you have 1, 2, 3 kids, whatever that number is, let's hit that matrix again. Okay, let's hit that matrix and let's enter in $12,000 per child. How many children do you have? I know you're spending more than $12,000 per year on, every child is gonna have more than $12,000 a year spent on them. So you could just fund them through payroll and then pay for those expenses, out of their own little baby account. All right. So now that we have this done, take a look on the right-hand side. We're starting to build up some tax savings here, which is great. And we're going to talk about this one. This was the biggie that got put in the new tax plan that got passed. This one has a pretty big impact across the board. At the same time, it's extremely confusing, extremely complicated, and not even the IRS fully understood some of the things that were written in there. So it's been revamped and revised, and it's going to continue to be revamped and revised. What everybody needs to know, the very, very basics of this, and again, we're all going to talk to our CPAs about this when it comes time. The very basics of this, the qualified business deductions. If you are a professional, an attorney, an accountant, a consultant, a financial advisor, there are certain industries that they put a limit on. But everybody else who doesn't fall into that limit, or if you are in one of these industries and your income is below the amount that you see below here as being married, being under 315,500, and single being under 157,500, you won't phase out and you'll qualify. And this is a 20% deduction. What that means is they're going to take 20% of that business income number that we've been entering onto this matrix sheet, and they're going to allow you to take 20% of that number. In this example, okay, in this matrix sheet here, I took 20% of my business income, that $88,000 that I'm using for my business income, 20% of that is now allowed to be a tax write-off. And when you take that and you apply that to your 18% tax rate, it's a substantial amount of savings. All right, and I want everybody to understand here, make sure that you look at some of these items here. There could be things that you're missing. Again, we want to keep this extremely simple. Okay, we want everybody to fully understand it. The most important thing here is to understand the flow of the tax brackets and make sure that you're comfortable talking taxes or understanding taxes. You have the basic information and the basic knowledge that you need so that you're not stressed at night. And if I total up my sheet here, just in this example that I put forward, I have $13,360 in tax savings from some new stuff and some new tricks that got put into play of tax tips and everything, which is a substantial amount of money. Those tax savings are literally going right into your pocket or right into your business for future growth. So I want to make sure everybody understood this side of it. Most importantly on this, tax savings is great. We're all going to make sure that we maximize it. I want to make sure that everybody understood, you know, how to project out your future expenses. Really start thinking and get creative. What vendors are out there so that you could lower your projections down, lower your future expenses down. You want to lower down your business income. Okay, what can you pay? And if you have cash flow left over, you're going to open up a retirement plan, paying your kids, which won't cost any money. That's just a quick little payroll function. And then that qualified business deduction, making sure that you fall into the right category there and you could take advantage of it. So that's the overview. I want to just go into here. If there's any specific questions on chat, I'll definitely going to jump in and see if we can answer some of those live. Let me just see here if I could pull open the chat and see if we could start to get some questions here. All right, Megan. So the answer to your question, yeah, you're going to go out to January. You can't, you know, you want to make sure that we're doing the right thing here. Go out to January, maybe February. If you're buying a piece of equipment, just go. If you're going to buy it January or February, pull it in now and take that advantage of the tax savings now. But otherwise, these future expenses, yeah, look into January, possibly February, and see what you could prepay. If you have a vendor that's slow to bill you, if you have a consultant that's working for you and they're always sending you bills later and later and later, pick up the phone and call them and see if you could prepay them. So really start to look at who's out there that you could pay and who out there that you're comfortable paying. The next question on here is $12,000 per child is effective for 2018. Yes, the $12,000 per child is effective as of 2018. What that means is you could run a bonus payroll at the end of the year. If you have payroll already set up for your company, you could run a bonus payroll at the end of the year and bonus out and pay your child $12,000. Each child $12,000. Justin, that's actually a really great question. Yeah, for the child deduction, you're not only getting a benefit because it's your child, you could pay any child or any minor. It usually makes the most sense if it's your own. However, if you have nieces and nephews and you could provide them or put an image of them on your website or use them for some sort of business purpose, you absolutely can pay them also and take advantage of that deduction. You will have to move that. You will have to move over that the money to them, but you could definitely go ahead and do that. It looks here, I'm a law practice. How do I handle qualified business deduction? Rebecca, if your income level is below the items that were presented earlier, and we're going to circle the deck around, if your income is below those thresholds, you will qualify. If it's above the thresholds, I believe it was around $315,500 if you're married, and about 157,500, I believe, if you were single. If your income's below those thresholds, you should qualify based off of the last adjustment that they just made. If you're above it, we're going to need to sit down and talk with your CPA and just kind of make sure that we could look at certain criteria that would still allow you. For the purpose of our matrix, I would include it because there's certain factors that go into play. Even if you are over the threshold, there's certain factors that come into play, and those factors usually relate in some sort of tax savings related to that. So go ahead and add that into your matrix for this question, but then we'll circle back and maybe talk about it in more detail about that. All your expenses for Rebecca asked, so do all my expenses for 2018 qualify? Qualifying for the tax deduction, so let me clarify this. That business tax deduction is based off of the business income that you have at the end of the year. It's not based off of how many expenses you have. Okay, so it's based off of the profit of the business at the end of the year that's made from the business. You're going to save 20% of that number. So the expenses won't come into play, impact there. The expenses will lower your profit. The more expenses you have, the more profit you're going to lower. But at the end of the day, when you can't get your expenses any lower, you will get that 20% kind of catch-all to take that 20% deduction that was just put into place with the last tax change. So I think I answered most of the questions. I hope that this was beneficial, not just on the tax saving. Oh, I got one more. Not just on the tax saving side, but also on understanding the tax bracket and how you should ballpark calculate the tax bracket. And I think that should be helpful also for everybody. Isla has here, I thought the child deduction was $6K. Did that change recently? It did. So the child deduction was $6,000 because there was something called a standard deduction that used to be $6,000. And now that standard deduction moved up to $12,000. So we could now increase that child credit, or that child deduction, sorry. And we could pay $12,000 instead of $6,000. Great question on that. And that was another benefit that came in through the recent tax changes. And it's just a function. The child deduction, and I'm smiling because this is a big conversation in our office, and Lil, my co-founder, as everybody knows, we always chat about this a lot. The child deduction is the big one. If you could just get them on payroll and get your payroll company to facilitate it, you'll be able to get that done. Do the children actually have to work to earn $12,000? I must have missed it on the first time around. Nope, no problem at all. Thank you, Rick. The children need to provide some value to your business. Working, yes, they could sweep the floors, clean up, do some sort of office type work, or they could be a model on your website that you pay modeling fees to. Okay, and earlier, as I was discussing, you're really going to need to go ahead and update 3-4 times a year. Just update their image on their website so you could justify constantly changing and paying them the modeling fee. It does need to be some sort of justification, but there are tax codes or tax cases that pass, and advertising qualified. What is this here? I heard that you can get tax credit for child's earned income. The earned income, the child's credit, there are increases in the tax credit for children. It falls onto the individual side. I believe it went from $1,000 to $2,000 this year. So Kim, the answer to that question is yes, it did go up. We were trying to scope and go more business because the individual stuff changed a lot also. But the answer to that is yes, the child tax credit did increase this year. And Rebecca, I think you already answered this, but for projecting future expenses, is that where I can estimate all the expenses I will have for 2019 or just accounts payable for 2018? Great question, Rebecca, again. So when you're going to go out and project future expenses, you're only going to project what's going to be paid in January, not for the entire year of 2019. And you're only going to go out and try and look at your vendor base or people who you typically pay and know who is it that I know I owe them money, they haven't sent me a bill, and they're going to send me a bill on January 1st. Again, keep in mind, a lot of companies are holding off on sending out bills and invoices when it gets to the middle of December. because they don't want to receive the money that year. Because if they receive that money in that current year, their income's going to go up and their taxes are going to go up. So you start to get into this game of companies and individuals not wanting to collect money. And then on the flip side, businesses like yourself that want to start to pay money. So you're going to need to look to your payees of who you paid in the past, see who you could owe some money to, and see if you could cut them that payment in 2018 and get it in there before the end of the year. Again, if it's a check, you could actually cut the check in December. And even if they don't deposit it, you could still take that as an expense. So you're okay if it's a timing issue. Just make sure you get those checks cut before December 31st. Let's see here if there's anything else. Great questions, by the way. This is really great to see how engaged people are with this topic. I know tax savings is always important and everybody kind of wants to maximize them, but we really appreciate everybody for hopping on here. We know you're small business owners. We're going to let everybody get back to work. Any other questions, please follow up on, and please send me over an email. My personal email is on the Google Doc that we sent out. We'll circle an email with our deck and my contact information also. Send them over. Send over your matrices. I want to see the tax savings for everybody, and I want to see who gets that $100 gift card. All right. Thank you everybody for jumping on. We look forward to doing some more webinars with everybody. Take care. Thank you, Rick. Appreciate it.